What up, YouTube? You can't stop trading and investing with your boy James E. Friday, gotta love Fridays. I love Fridays, man. Today I want to talk about two different stocks. I'm just gonna do them in one video. I want to talk about ASTI, the position that I took on that for an overnight play. Also want to talk about MDMP, that massive runner from fucking 2 cents to nearly $1, and how I was able to capitalize on that and what I seen that made me want to hop in it. I wanted to get into both of those, but before I do, man, please click that like button. Please subscribe. It is very much appreciated. I am not a financial advisor. I'm just a guy that likes to research and analyze anything I find interesting in the stock market, and I like to share that with anybody willing to listen. So, that being said, let's just get right into it. Boom, boom. Let's start with ASTI. So ASTI was looking like it was continuing the trend. If you guys watched my previous video, if you haven't, please go and do so. You'll know I capitalized on ASTI beautifully with this beautiful gap up yesterday. Collected me a nice, over $3 profit on it. And it looked like it was maintaining the trend, and it did gap up like I wanted to. So I had bought 400,000 shares anticipating a gap up. But as you can see, I took a loss. I lost 322 here in this account, and in this account lost a little under 200 here. The reason for that is of pure volume, okay? So you guys got to know this thing, man. Like, sometimes they just don't work. When it works, it works. When it doesn't, it doesn't. So overall, I lost roughly a little under 3% profit. So, a little under 3%, losing under 3%, that's right in my comfort zone, man. 3% or less. That's where I like to cut my losses. I had the chance. Obviously, it did gap up. But the fact was I was just too heavy in size. So if you could see right here, actually, let me go here. ASTI. If we get into here, boom, the 1 minute. Now, typically what I want to see, if you look at the first 1 minute, if you look down here, it'll tell you in this volume. So right here, it traded 2.7 million shares in that first minute. Now, typically for me, where I've noticed percentage-wise how you're able to execute immediately is when you have roughly about maybe 1-2%, maybe 3% max of the actual volume being traded. So I had 400,000 shares, and 400,000 shares of 2.7, 2.7%. That's well over 10%. That's, roughly around like 12 to 13% of the actual shares being traded in this candle. So the moment I sold, or the moment I hit my sell button, I like to sell the market just to get out immediately. Nothing was being executed. As you can see, I had more shares here and had a 197 loss compared to me having 180. So I had 40,000 more shares in the other account and lost less. Compared to this one, I lost 322. And that's because this one just wasn't getting executed. It was just dropping off and just would not execute. It just kept dropping this morning. And so, I had to eat that loss, and that's fine. I'm perfectly okay with that. It's part of the game. Sometimes it works, sometimes it doesn't. Yes, it gapped up, but that's something that you guys want to look for me particular as well, is the volume, which is why I didn't go all in. Now, if you watched the last video, I went in on all three accounts, bought 600,000 shares. This time, it looked a little bit weaker to me because you do notice the fall off in volume. As you can see right here, after this big perk in volume, and we talk about that, a perk in volume in a green day, we typically have a gap up. So capitalized on that. But then if you look right here, the volume's almost half of what it traded the previous day. So the volume started fading off. But I figured, okay, it's still holding this trend. So it's still a potential gap up. For maybe a smaller percentage, because I made about 11% on this one. So I thought, okay, I could still get a gap up for maybe about a 5 or 6%, which is what it did, but just not enough buyers in the market in the morning. And so it just wouldn't execute. And so I wound up taking a -3% loss. And that's okay. but that's something to look out for. Volume. Understand the size, your position size compared to what kind of volume is it trading in that first minute if you want to do an overnight play. And that's exactly what, you know, and so I did go a little smaller size. The reason why I went smaller size is because of MDMP. And I was able to capitalize beautifully. Percentage-wise, this is the biggest gain I have had in my career since I started my journey. I made 21% profit on this thing this morning. Closed yesterday with me up roughly $325. So ultimately on my position, I made $3,100. As you can see right here, 28.31. And then just add the 325 right at the end because I bought it on this dip. And right before it closed, it popped. So it gave me about $325 to close my day yesterday. So that is this position. So overall on my position, made $3,100 on a $15,000 position. So 21% profit, man. For me, that's a home run, you know? So that was beautiful. So why did I choose this move right here? So first of all, when I seen this run on Thursday, or was this Wednesday? Yeah, Wednesday. Went from near 2 cents all the way up to 25 cents. You know, that was 1,100% run. And then so Friday, it gapped up. Okay, so that tells me, okay, this thing can gap up. So that was the first sign. Then we had this huge squeeze all the way up to 94. So nearly $1. And then had a nearly a 50, oh, this is more than a 50% drop down to the 40s. So that was, and typically, you know, when you see a big drop like that, you know, we're bound to have a bounce. So whether it was going to be a gap up or open at the same and squeeze, we're bound to have a bounce when it drops 50% or more. So right here at the end, I purchased it, 30,000 shares, as you can see right here. You know, bought it, I believe my total, because I bought it multiple times. I bought it 2 times, like 12,000 shares and then like 18,000. So my overall was like a little under, my average was a little under 49 cents. It was like 48. And you know, sometimes in these decimal points, it could be 48, 5, 6, 7, 8, 9, you know, something like that. So I bought it in that area and then it closed at 50. So, you know, it gave me about a, you know, a little over $300 profit right there at the close. So that told me, okay, good, we're going to get a nice squeeze in the morning. And sure enough, it did. And again, man, it had an actual, from the closing price all the way to the high of the 68s, had a 36% squeeze. And I just got out immediately. I was out in the 59s and took a beautiful 21% profit. And then, you know, immediately when I sold, it pushed all the way up to the 68. You know, so that could have been a 36% profit. I could have definitely made more profit. But again, you never know what's going to happen. So I take what the market gives me. If I'm over 10%, I'm good. And it kind of scared me a little bit. The reason why I sold it immediately as well was because before the market opened, when you look right here in the bid and ask, and I talk about this all the time, I do the same shit over and over. When I looked right here, it was at, I believe, 58.5 by 55 originally. So I was like, okay, cool, I'm gapping up 10%, which was $1,500. So I was like, cool, that's perfect. And then all of a sudden, I was seeing 62 prints going off right here. And then this shot up, you know, to 59, and then this shot up to 58. So now I'm like, oh, cool, now I'm really in the money. I'm making some big money. And then like right before, like 2 minutes before the market, it dropped down. Like this dropped back down. It dropped down to 52. And then this one was 55. And then so like it was bouncing around from, you know, a drop and then it go back up, then a drop. And then within the last minute, it winded up being 59 by 59.5, like within the few seconds before the market opened. So, you know, I didn't know which way it was going to go because you can see it right here. Boom, you seen it getting real choppy. So, you know, it opened right here, you know, in the 50, popped up, you know, in the 59, came down 54s, back up here. Like this is what the pre-market was looking like, 62s, then back down to 57. And like, so this thing just kept jumping around. So I was like, yeah, I don't know which way it's going to go. It could just drop. You know, you just don't know. So I just decided to sell it at 59 and then it squeezed up to 68. So, hey, but again, 59 for me was a 21% profit. That's huge. You know, I only wish I would have, you know, threw more size in it. And the reason why, again, is consistency, man. I want to see more in the chart. Obviously, I have a very small sample size, 1 day of gap up here. But I've seen this plenty of times before in the OTC market where we'll have a first huge green day, a second huge green day, and then a complete drop off more than 50%, and then it gaps up. I've seen it time and time again in the OTC market. So the odds of it gapping up after a 50% drop were in my favor. So, you know, I didn't go full size. Again, man, I have 3 accounts. So, you know, I took maybe about a 40% of my net and threw it in here, and then threw the rest in ASTI, which, you know, obviously ASTI is more consistent for me, and it's been more consistent, and I have more of a, you know, more chart pattern to analyze. But that one just didn't have enough volume in the morning for me compared to this one. Just look at the 1 minute volume. You know, right at the market open. Wait, where are we, man? Oh, wrong chart. Bop, bop. Nope, ASTI, nope. Okay, yeah, here we go. Yeah, man, just look at the market open. You know, 1.5 million shares, and all I had was 30,000 shares. So, you know, we're talking a very small percentage of the actual volume being traded in that minute, and that's what I'm talking about. The actual percentage of volume compared to, I'm sorry, the percentage of your position size compared to the volume, it matters when you're trying to execute and get it out as fast as you can. So 30,000 shares out of 1.5 million in 1 minute, that's nothing to be executed compared to 400,000 shares and a 2.7 million. That's a lot harder to execute. And as you can see, you know, 21% profit here and a minus 3% profit here. You know, so overall on the day, you know, overall between the two, winded up with about $2,600, you know, to close out my week. So yeah, man, just finished my week beautifully. MDMP is still in play for me, just depending on what I'm going to see for the rest of the day. Is going to depend on whether or not, you know, I get back in this thing. But that's going to be it for today, guys. Again, capitalizing on the same shit over and over and over, cutting my losses when it don't work, and taking my profits when they present themselves, man. I don't, there's no need to get greedy because you don't know. As you can see here, it popped, but then look, now it's down in the 43s. So, you know, if you hold these things, you don't know what's going to happen. I mean, for all I know, it could have popped back up to the 80s if it had enough buyers, but no, it just dropped off. So, you know, you just don't know. So minus 3 plus 10, I'm good, okay? So that's going to be it for today, guys. Leave a comment. Let me know what you think of my analysis. Again, if you made it this far, please click that like button. Please subscribe. You can't stop Mafia. It's a mindset movement, meaning never stop yourself, never stop your progress, never stop your education, especially in finance. Having multiple streams of income is an amazing thing, and the stock market is a place where you can do that. So ASTI took a minus 3% loss on it, which is very much part of the process, and MDMP got a home run hit on it and took a 21% profit, my biggest profit margin I have taken today. So that's going to be it, man. I'll be sure to keep you updated as much as possible. Till next time, I'm out. Peace.